piece of the team.
All right, welcome back to another episode of Chart Talk. Running through the same things we do every week. Member ideas, social media questions, some good charts, some bad trades, some good trades, some market outlook. We're going to run through it all. Bennett, how you doing this week?
I'm doing great.
All right, well, let's jump right into the market outlook.
Let's do it.
All right, so market outlook. We got a pullback finally in the market. It was a combination of Thursday, Friday, and then we walked into a gap down today. That had me thinking, maybe it's a little time to be a little hands-off, maybe a little risk-off mode. But then, everyone's dying for a pullback. Everyone and their mother is saying, I have all this capital to deploy if we get that pullback. And just conventional wisdom, honestly, makes me believe that we're not going to get as deep a pullback as everyone's looking for, just because everyone wants it so bad. Everyone hates this rally. They don't have enough stock. They don't have capital deployed. You heard Warren Buffett the other day come out and say, the Fed acted too quickly for me to buy anything. AKA, I fucking missed the buy is pretty much what he said. So that just has me thinking we actually might continue to grind higher. So we got that pullback today, and the SPY bounced a little bit, but the strength was really in the NASDAQ and the tech names. So some really great information there. Do I think we'll get maybe a macro pullback or maybe in the next few weeks? That's a definite possibility, but I'm worried about the next few days. And with today's action, how we just bought up that gap down, I think next 3-4 days we'll at least see a trending. We should. I don't know what's going to happen. Trending action. Mm-hmm. What are your thoughts?
Just one little thing to add, and something I mentioned in the big picture yesterday was if you if you put up like the SPY and you put up like a horizontal line across the high like 296, and if you kind of zoom out going back to like mid 2018. You'll see that this 296 area, this 300 area has been an area of resistance. And this has been a spot where, through the last few years, the corrections that we've had, we've corrected, and then we've kind of rallied back into this 296. And that's where we've met that resistance. So for that, we've had this crazy run. And I think that now we start to kind of, consolidate underneath that level, underneath that 300, 296. And maybe we have to, like you talk about, this little pullback, a little bit of a shakeout, something to kind of, give people what they want. But eventually we'll get that move through 296. I just think that now it's going to take some time. And again, those guys got caught flat-footed. A lot of those guys are looking to buy things now when there's just not that many setups, given how much the market has come in these last, 6 to 8 weeks.
Yeah. I think it's important to point out also, we pretty much said opposite things about the market, but we have similar, macro tendencies. I'm not saying this is the time to absolutely load the boat, but I'm talking about from my time frame, which is really this week of trading. I think we'll see some positive action. But I'm with you at SPY 302. After the 30% run, isn't the time to have the boat absolutely loaded. So I just wanted to point that out. All right, where we at? What's next?
We can jump into the member ideas.
All
First, we got Joe DeFrank, Average Joe, looking at SMAR through that level.
This is one of my favorites out right now. Smart Sheet, a software name, somewhat recent IPO, May 2018, looking to take out highs, massive macro pattern, beautiful daily flag in front of the level, earnings out of the way. It did come a long way. So, obviously, more consolidation we can get up here, the better, through this 54.50 area. But this one doesn't look like it really wants to wait around too long.
Yeah, this looks great. I love this, but even like during that the market polling we had, that it shook out that like 34 area, which was like such a major level of support in the stock. That just forced people to kind of chase back into it. I think that looks great. Next, we got Roberto looking at this OKE through 30, 32.
This isn't for me. This is more of one of your trades, if you want it.
Yeah, I could see the level in it. But again, we have to just take into consideration oil is so beat up, and just in general. And again, this is a pipeline. It's a little bit different, but it's still in that it's like the brother in the energy space. So it's still, I think it's still something I'm going to avoid. But eventually, in time, 32 is a level. The other one he's looking at is this Travelers TRV. He's looking at a verse that support area of 92. He's looking to buy back in through like 99, verse 92.
This is another one. It's not really me.
Yeah.
If you want this.
Yeah, he was. I was talking about before, and I believe he actually got in because he was looking at an entry up through 93 versus that 92 area. So that if he got that buy, then he's sitting pretty with it.
Okay.
So yeah.
Oh, yeah, I see that. That's nice.
Yeah, that was a great buy. But just since it went already, it's hard to talk about now.
Yeah.
Next, we got Nicholas looking at McDonald's through
MCD.
186.
Just had earnings, huh? I mean, it looks like it could go higher here. I don't really like the spot.
Yeah.
I think it kind of, made its move, and now it needs to consolidate to give a really good setup. Could it go higher from here? Absolutely. But I don't want to put any risk behind that.
Yeah. We could see, like, if you draw like a horizontal line across 190, and if you go back to, like, 2019, we can see that, back in 2019, 190 was resistance, started to act as support, late 2019 into 2020, and now it's starting to act as resistance again. So, for Nick, if you really like McDonald's, it probably will be easier just to wait for 190, even if it takes a few weeks or a few months, than to kind of arbitrarily buy, 186 versus, 177, which is kind of random given it's already ran, 60 points in this last month. So unfortunately, the meat of the move is kind of behind us in this name.
I will say, though, that, I come to, especially during earnings season, I'll get to the office real early, like a gross hour, 5 a.m. or something. The only thing open is McDonald's, and I've been crushing sausage muffins. They are so fire. That's all I wanted to say.
Okay.
The hash browns, oh my God.
Next, Stefan has a question. Jake, this is me more geared towards you. Yes. What do you mean when you say you're seeing volume confirmation in a trade? And he was mentioning, today we were talking about the team trade that everyone was buying.
Hell yeah. I mean, so this was a trade of the week this week. I only have 100 shares. I couldn't load up. I wasn't confident it was going to do this today, and so it did that. Volume confirmation is, so this name is breaking out to new highs, and we want to see it have greater volume. What I usually do is look at the prior day or the 20-day moving, the 20-day volume average, and I want it to have a significantly greater volume than that above the level. So far side confirmation. So the level here is like 158-ish, 159. It's not a hard level, kind of a soft level. I want to see big volume above that level, showing me that funds are piling into this name into new all-time highs, and that's what we got today. Volume confirmation, closed at all-time highs after some killer earnings. This name looks so good going forward. Obviously I wish I had more of it, but only a little bit. Hopefully some peeps loaded up.
All right. Hopefully, Stefan, hopefully that answered your question. Next, we got Cameron. He's looking at this AT&T up through 30 verse 29.
Yeah, it could. I mean, it turned in this area into support. AT&T. Earnings out of the way. Yeah, I mean, a controlled pullback into the support area. Now it's pushing up off it. Yeah, that's a support buy. I like it.
Yeah. And later where this is, Cameron, this is kind of similar to like the Intel trade we'll talk about later, where we're trying to look at it after a few days down.
Kinda. I'll talk about the
kind
differences.
of, but I'm just saying, like, it's this third day down buying up versus trying to say buy 31, which is gonna be a much harder trade, especially like that's just a relation I was trying to make. Next we got Golem. He's looking at this EA through 118.
They have earnings, so pass. Even so, I think it's gone too far. EA's not like a team, It's very different the way it trades. So earnings, so it's a pass, but I still just okay.
Yeah, it's kind of similar to like we were talking about just moments ago with T. It's like this is trying to buy T at 31. Where if he was buying up through say 112 versus 110, it's a much better risk reward trade than buying 118 versus 110, having to risk 8 points in the name. Next, we got PayPal, PYPL. He's looking at this 124.
Same thing.
120.
So it has earnings a couple days away, so it's a pass. But anyway, like this, coming out of 100, like that's the buy, and then you want to be selling this area. This is a huge resistance area. The stock looks exhausted going into it. Could it go higher? Yeah, but I don't want to buy that and try to make a living off it.
Yeah, I could not agree more with that. And lastly, he's at this TYL through 320.
This is a nice chart. And earnings out of the way. A little bit of a thin name. through 320. Yeah, I like that. I mean, you got to give it down to support level 305. But $25 isn't too much to give in a $320 name. I like that. That's good. That's good. Good stuff.
Let's see. Next, we got Khan. He liked SMAR as well, so we'll skip that.
Hell yeah.
Microsoft, 180.
Yeah. No, I mean, this is a fucking market leader. Killer earnings. They came out and said, whatchamacallit? They came back and said COVID had zero effects on their business. So when market leaders come out and say that shit, they want to go higher, it seems like. So this one looks like it's just going to trend higher. But I'm with you in more of support buys over breakout buys right now. You have to buy that 180.50. You have to give it like $5-6. That's a bit of a tougher trade than buying against this 170 or something. But I like the name going forward. I think it'll continue to lead.
And then last up for Khan is also going to Oracle. ORCL through 52 verse 51.
See, this is the shit we're talking about. This is what we want. This is everything you've been saying so far. This chart talk. This is similar to our Intel trade. So this is great. This is great. I'm writing it down for myself. This is, too often these choppy markets we're trying for these breakout buys where you got to be perfect and you just get a little chopped up. So you buy these support buys, and if you're wrong, you're wrong. Like it'll show you're wrong. Whereas, you buy a breakout buy, it might not be right that day, but the stock will still be right, and you just get frustration from that and shitty losses. So this one looks really nice.
Yeah, so this is, and got like before we were talking about, what was it? That EA where you're buying 118 versus 110, you're risking 8 points. This, we're buying 52 versus 51, we're risking $1. It's much easier to make $5 and $1 risk than trying to make, $40 on $8 risk. But this is, we can take the trade 10 times, and it's much. If they're wrong, it's not as costly as the high risk ones. Next, we've got Visuals looking at ALLO, which won today, looking at it through 30.
Yeah, I talked about that with him. They have earnings tomorrow, so.
Campbell Soup, CPB through 51, one that hasn't gone.
Oh, yeah. I like that. Nice little flag. That's just a nice little flag here. Looks like it goes higher.
Let's see. Then we got, next up, we got this NLSN.
Nielsen, TV ratings, huh?
Yeah, marketing company.
These are the people who do TV ratings, Nielsen advertising and stuff like that. No, this name is just way too fucking beat up for me. It's down, 80% from highs.
Hard
pass. So when I decide whether a name is up too much or not, I generally look at percentage away from highs, and this one's 80% away from highs. I generally don't like things that are too much further than 50% away from highs on comeback plays, things like that. So this Nielsen is just too beat up.
Yeah, I was literally going to say the same thing. Where if you go back, even like financial crisis, go back to 08 and look at some of the charts, and even recently, a lot of those, even the Dow 30, the names that got cut in half, those are the names that are more than likely, within 20% of their highs. Where the names that got really smoked, like Boeing that was down, 70% plus off, it's still kind of in no man's land in that bottom right hand corner of its chart. Same with this, where when they lose too much percentage-wise, as much as you think how crazy it would be if it goes back to those highs, if it hasn't made that move yet, it's going to take so much longer. And this downtrend's been this NLSN for almost 4 years now. So for 4 years, this thing is nothing but go lower. It's probably not going to change anytime soon. And especially within the time frame that you're going to try to hold this in, it's definitely not going to change. So hard pass on that. And then he had a couple questions. Separate from names. So we mentioned what type of setups on your radar? Are you looking for top right bull flags or names kind of flagging in the middle? And could bottom setups give better returns if they haven't been rebounding? So a lot of parties trying to rationalize that NLSN trade, which we've already talked about. It's gone too far.
Just different. I'm looking for both. I'm looking at different setups. Obviously, team was trade of the week. Look at this, making new all-time highs. Fucking everything. You cannot dislike this chart. There's nothing to dislike. But we're also, looking at this like Intel. We're trying to buy against this 56 area. So, same. We're looking at both types of trades very simply.
Yeah. Except for the names that are down 80%. That's the one thing we're definitely not.
Names down 80%, I don't buy.
And then the other question he had, again, it's mortgage or do you shake? He said, are you focusing more on swing trading now, or are you still trying to be more active day trading?
Again, kind of like a both thing. Like I bought Peloton today, and that was more of a day trade. But like I'm positioning myself for a swing trade in this Intel, for example, or Spotify. We'll talk about that later. So I'm doing it all still. Fuck.
All right. We are at the member questions. If you want, we'll jump into some of the social media questions. They're not as bad this week.
Okay.
All right. So the first one, and again, we're ripping the Band-Aid off quick. Alex Venabas is asking about Boeing, your favorite name, Shake.
What's the question? You just wants to say Boeing?
Again, this is just one of those. I've been trying to get them to put game plans, but you just said Boeing, just very broad.
No, Boeing in the short term, if they get bailed out by the government or something happens, they could have some good news. But I'm avoiding this name at all costs. I get it. It's such a big company that it's too big to fail, and the government has to bail them out, so it has to come back, right? I don't want to play that game though, personally. Fuck Boeing.
Yeah. If there was a gun in my head, I'd buy it up through 140 versus 120. But I'm with you in the same camp where it's as much as we.
No one has a gun to your head when you're investing.
I'm just saying.
You're not just saying it because I got a gun pointed to you.
Why don't you just put the gun down?
If there was an imaginary gun, I'm buying 140 versus 120. But I'm in the same camp with you. It's
Who is
down
doing that?
too much.
Who is holding that gun? Buy this fucking stock through 140.
We get asked about it like 9 times a day, so we gotta give
It's just a
someone.
hot stock in the news.
Yeah.
I get it.
Yeah. Next we got San_Dynamo, and this will be a good one. He asked, "What's your best one-liner you can suggest to a new trader?"
It won't happen overnight.
Okay. Mine is, you probably have no clue what you're talking about, and also what you think is going to happen. More than likely, the complete opposite is going to happen.
I'm a bit more positive.
Well, I'm giving them the real truth. Next, we got Jake Lundstrom, DHI through 46.
Oh, this guy gave us a nice little setup here. I like this. All right, so what we were just talking about in the Alpha Chat right before we started filming this is earnings names holding their gap ups and how bullish it is. So we head over to the weekly chart. We see this huge week it had last week because of the earnings gap. That becomes a flagpole. That is super, super bullish. So this DHI against these earnings day lows, I love this. I love this setup. Through the 46.75 area against these lows, that's a great setup. Love it.
All right, Jake, there's your answer. Next, we got Jade Lamp. His question is, what is your advice regarding market volatility when dealing with earnings reports? What really he's saying is, should I gamble on earnings? He's just trying to word it fancy.
Or is he saying, like, if I'm a little sketched out about the market, about what the S&P is going to do or something, am I, like, getting out of names like, for example, like Snapchat, which it's not super, super market correlated. It is in some sense. But am I getting too spooked by the market at these levels to still swing trade earnings names? That's what I'm taking out of the question. And no, I'm not. I'm treating them as individual trades themselves and not trying to overthink it.
All right. All right, so it was quick this week. We're through social media question, Shake, if you want to jump into good trade, bad trade.
Yeah, I have a decent amount to talk about. I had such a good April, and then this is why I usually take breaks when I go on good runs, because then I just do dumb shit for a week, and that's what I felt I did last week. So I've got a decent amount to talk about. I'm going to start with Peloton. So we were talking about how the breakout buys versus the support buys. So we were doing the right thing in this Peloton. Because 2 Fridays ago, April 24th, we saw huge buying off that $30 when Peloton announced that they had a record live streaming audience. They had 24,000 people for a class. And that just gave it all this bullish volume and all that stuff. So we were hawking it. We were like, all right, on this pullback, we want to buy it against 30 because that's where we saw buying come in. So a few days later, April 28th, I was buying the dip on Peloton hard. And I ended up just kind of getting out end of day when it closed 29.80 because it took out that 30, but it really needed to take out 29 to the downside. So I bought 29 on the way up, and then when it retested, I was playing against 30. That's just like, a simple little detail that will fuck up my whole week. So I missed that trade. I ended up buying it today, and I kicked some into strength. But again, that's the breakout buy, and now I'm in these past 2 weeks, I'm like break even in the name, when I should be killing it. So that was when I messed up. And then so this Intel, all right, and then I messed up this Intel too. Whereas, all right, so we bought this last Wednesday-ish, whatever that was, through this 60 quarter area. I was fucking massive, and there's the bigger level above it sitting there at 62. So I was sitting there like I'm cautious about the market. I'm going over the Nasdaq, and I knew we were overbought a bit, and that am I asking too much of the market to hold that entire position? So then the next day it comes right back to our price, and I know the real out is 58 and 56. So I downsize on it. I don't take anything off that first day, and I downsize break even, knowing that it'll likely give me a shot lower. And I ended up loading the absolute boat today. I got a full position on now, but what I needed to do was take some off that first day, like I've been doing. I've been taking things off day one the entire month of April, and then I wanted to stop because my P&L was up and all these outside factors that caused me to mess up these trades. So I told you where I messed that Intel up, and then here's where I did well with this snap. So I bought this snap 17. And then, again, that next day where things were coming back, I had no problem taking off snap under 18 because I felt it would likely, I could hold on to a core because the real out, I'm not wrong in the trade until it breaks this earnings day low, this 15 area. So I knew how far that was, and I would probably get another chance lower to buy the stock. So I didn't hesitate at all taking some off under 18. That was the proper thing to do. I only have a feeler position, but I booked some profit. Now I have a great read on the name. Whereas Intel, I could have booked a bunch of profit, and I still have a good read on the name, but I didn't make any money. I didn't book anything, so that was my main mistake there. And that's all I really got to go over. What about you? What do you got?
So I have two. One was American Express. We talked about last week was through that 85 buy. The main mistake for me is we had that great 3-day pop into 96, and this was just me not being stubborn, but still kind of stuck. Because I've been in the same for a bit. I bought earlier through 90 where I didn't want to start. If I'm saying I'm looking to buy this and hold it back to the reach at the highs, I'm trying not to sell in those quick 3-day moves, which realistically I should be. And now it's kind of back to where I basically was buying it last week. So that was one of the main mistakes. And again, that's kind of the tricky part when short term. You should take some off, but in your head you're like, if I'm saying I'm going to look to sell it at 130, 140, why am I looking to sell it at a few points higher?
Right.
And that's that's trading. And then the other one was, I guess, good trading. Again, it's kind of just starting. Was this Intel? We've been talking a lot in this entire chart talk about buying back up off of support and trying to avoid some of those breakout plays. So for Intel, instead of trying to buy 62 and being perfect, I'm trying to buy 58 versus 56. And then if it can get up to 62 and it does break out, that's great. But I have much better stock. I'm risking $2 versus having to risk, $8 in Intel, which is just way too much in that name. So that's the focus I'm trying to shift in this week. I'm trying to find more of these Intel setups. Take advantage.
Are you in this Intel now, or are you waiting till tomorrow?
No, I'm in it. I just checked. I had it was at a 58.05 buy stop. The high day was 58.07, so I definitely got hit.
Someone's got to be the high.
Yeah. I'll take it, though. So with that, if you want, we could jump into top idea of the week.
So I mean, that SMAR was mentioned. But things like we're trying to buy the retest, the retest of earnings days lows, and that's so PAYC. We missed it today, but these are the things we're looking for, where it's like strong earnings day move, and then it comes back and retests that level, and we saw it in this PKG, very similar. We're talking about at the end of the day. These are the things we need to look for. These retests, because that is such a nice setup. We talked about this Intel a lot. I like that. I like Snapchat still. And then lastly, this work, WORK, Slack against this 25 area. They don't have earnings for another month or so there's some time there. So if it's able to push up through this, 2750-ish area against that 25, that looks like a pretty nice support buy to me.
All right. The one main one I'm looking at, other than the Intel that I got triggered in later in the day, would be this Disney. This is a name that we've been buying up through like that 95 area, back in the end of March, and now we can start to see that 108 has been resistance. But as we've been talking about, we're not trying to buy that resistance breakout right now. We're trying to buy up off of support, and we can see in Disney recently, the 100 area, 98, 99 has been some soft area support. So I'll be looking to buy up through 104, versus 100. And add to the position that I've already been in, for some time now. So I can add up through 104. I don't have to be as perfect trying to buy that 108 in a couple of days since it's already pulled down a few.
I feel like you might buy that 108 in a few days. They have earnings tomorrow.
Sure. Well, I got to go change his bicep to a 5-stop limit. Thanks for that.
No doubt.
All right. I think with that, we can jump into book of the week.
All right, let's jump in.
Jake, what are you reading this week?
All right, so I am fucking obsessed with this Michael Jordan documentary right now.
My mentality was to go out and win at any cost.
I've watched everyone like twice. So motivated, just kill everyone else, competition wise. So I got this little. It's a old school book. It was Michael on Michael. It's more of like a coffee table book, but it's the first time he ever came out and kind of gave things from his perspective. And you just see the raw, unfiltered, competitive side of him, where he just literally wants to beat everybody that stands in his way. You know, they say the guys during this day and age all like team up and stuff. Jordan was the opposite. He wanted to beat all the guys. Anyone that was considered anywhere near as good as him, he wanted to crush. And, you know, you get this all these beautiful pictures within it. Michael on Michael. That's what I got.
I was wondering why I kept seeing all these like Michael Jordan pictures like on social media, and I'm like, why is this coming up so much?
Oh my God, this documentary. So it's a documentary from the 90s where they had all this. It's 10 hours. They're doing it over 5 weeks, and then all this footage that MJ was keeping in a vault in Secaucus, New Jersey, actually. Yeah. But now they just released it, and they moved up the schedule because of the quarantine stuff, and it's awesome. Here's the quote on the back of this book. When I step on the court, I'm ready to play. If you're playing against me, you better be ready too. If you're not going to compete, then I'll dominate you. That's the mentality right there. What are you reading? Some fucking pussy psychological shit?
I was gonna say I took your advice and I got the Where the Customer's Yachts book. I also got Money Making Secrets book, but I haven't started them yet. I'm still on the Triumphs of Experience. It's a thick one. It's a doozy.
Okay.
So I'll save you any of the boring stuff. But there was one funny line, and I think it relates to both you and myself when it comes to like going on vacations. The line goes, children have warm relations with their fathers, not as much with their mothers, seem to have an enhancement for capacity to play, meaning that they enjoy vacations more than others, and they also tend to use humor as a coping mechanism when getting made fun of, which I think, you know, for you and I, we do travel a lot. We do enjoy vacations more than most, and I think we both have pretty close relationships with our father, so that kind of, which is a little bit relative, but other than that, it's that book has been a tough read.
Okay.
I'm way over it, but so that's it.
All right, that's all we got for you, folks.
Until next week.
Till next week. See you then.